Bitcoin has seen a modest resurgence after its steepest one-day decline in history on Thursday. The original cryptocurrency rose as much as 5.8% on Friday after its 13% slide a day earlier. It's fallen 20% this week alone and remains on track for its worst week since 2022. And this wipes out all the gains made since Donald Trump took office in January 2025. Well, let's talk now to Jason Deane, a Bitcoin analyst and co-CEO of the renewable energy company RenewaBlox. Jason, good to see you. Thanks for coming on the programme. So looking at the price of Bitcoin, it has bounced back a bit, hasn't it? But by any stretch, Bitcoin's had a dramatic plunge recently. Why is that?
Yeah, good evening, Robin. Yeah, it's been quite the ride, hasn't it, over the last few months? I mean, Bitcoin hit a new all-time high. I think it was October last year, about $126,000. And at that point, you normally expect to see a little bit of a correction, a little bit of cooling off while some traders take profits. But that actually started a decline, which just sort of carried on and then gradually accelerated, and we find ourselves where we are today. So what are the three key reasons? Well, there is that selling off to start with. There has also been, you've got to remember, Bitcoin is traded very much still as a risk-on asset. So whenever there's any bad economic news or macroeconomic environment looks pretty poor, it's usually one of the first assets to sell off, and we've seen that here. And once that starts, you get a cascading effect where people who have leveraged their Bitcoin are forced to liquidate because they can't make the margin calls. That creates extra selling pressure, which lowers the price even further. So you just end up with just a collapsing domino effect almost.
Bitcoin, perhaps the best known cryptocurrency, but the market as a whole has lost around, I believe it's $2 trillion in the last couple of months. I mean, this is a very fragile market, isn't it? What does that say to investors, potential investors?
Well, this is the point where I kind of make distinction between Bitcoin and crypto. They are different things. They're always lumped together in the same category, but they are very, very different. So Bitcoin is like gold 2.0. It's a digital version of gold. It is provably scarce. You can't create it. You have to earn it, buy it, or mine it. There is no other way to acquire it. Cryptocurrencies, that's everything else, altcoins we call them. They are basically equities, essentially, issued by individuals, companies, foundations, whatever. They are controlled by a person or that group of people. And that means they are inherently risky anyway. So there's a credibility problem there for me in the first place, but they are particularly fragile. The trouble is they are still often very linked with Bitcoin, which is this hard asset, and the two usually do move in tandem. But yeah, you'll normally see a worse reduction in the altcoins, as we've seen this time around as well.
Well, interesting that you mentioned gold, because we have a senior figure from JP Morgan saying Bitcoin now looks more attractive than gold long term because of its volatility and its value prospects. What's your view?
Yeah, I mean, I'm probably the wrong person to ask, because I'm immediately going to say I think Bitcoin is a more attractive long-term view. I think, gold has seen this enormous influx of capital over the last few months, and that's a lot to do with this flight to safety and these uncertain conditions. So gold itself hits a new all-time high just recently after not moving for many, many years. And I suspect we might see some of that capital rotating into Bitcoin at some point once the dust has settled a bit. But, long term, I think Bitcoin is the better bet, but that's just my view.
We talk a lot, don't we, about stronger regulation over Bitcoin and cryptocurrency more broadly. Do you think if stronger regulation was in place now, a volatility like this would have been better managed?
I think the short answer to that is no, because markets will do what markets want to do. Legislation has changed a lot. I mean, it's actually moving positively in most countries around the world. Most governments now are, have acknowledged that this thing's not going away, and they've got to create a framework for taxation, for managing payments, etc. So we are seeing actually really much more clarity on regulation. Now, whether that would affect anything like this is a different question. My personal view is probably not.
Jason, thank you so much for coming on the programme. Great to talk to you today. That's Jason Deane from RenewaBlox.